Money, the lifeblood of empires, has evolved from coin to clicks. Yet gold, that ancient coveted metal, once anchored it all. What if we rewound time, tethering every global currency back to its immutable gleam? How would finance, power, and life itself utterly transform? And let's find the answer to the question, what if? A return to the gold standard would usher in the reign of scarcity, fundamentally reshaping our economic philosophy. Governments and central banks would lose the unprecedented power to print money at will. This shift would enforce rigorous fiscal discipline, compelling nations to balance budgets strictly against their actual gold reserves. Monetary policy would transform dramatically. Interest rates would directly reflect the global supply and demand for gold, potentially leading to lower inflation or even consistent deflation. This would profoundly impact borrowing costs and investment strategies. Crucially, personal savings would regain their inherent value over time, no longer eroded by inflationary pressures, thus powerfully incentivizing long-term thrift and prudent financial planning for individuals worldwide. Reverting to a gold standard would trigger a massive geopolitical gold rush, fundamentally reshaping global power dynamics. Nations possessing substantial gold reserves or access to productive gold mines would gain immense economic and political leverage, dictating terms in trade and diplomacy. International trade would then operate on stable, gold-backed exchange rates. Countries would prioritize export surpluses as a direct means to accumulate physical gold reserves, rather than accumulating foreign currencies. This paradigm shift would intensify the race for new gold discoveries, elevating it to a global priority. Such a scramble could spark conflicts over gold-rich territories and mining technologies, while also forging new, economically crucial alliances centered around this precious metal, drastically altering the international landscape. A global gold standard would fundamentally recalibrate the investor's compass, reshaping how wealth is sought and risk is managed. Gold would ascend as the ultimate safe haven, attracting vast capital as the premier store of value and the most liquid asset, potentially overshadowing traditional asset classes with its unparalleled stability and security. This paradigm shift would spark a profound revaluation of real assets and productivity. Investment focus would pivot sharply towards tangible assets, productive enterprises, and genuine innovations that directly contribute to economic output, moving away from purely financial speculation. Furthermore, a new era for debt and credit would emerge. Lending practices would become inherently more conservative and disciplined, demanding greater emphasis on physical collateral, robust balance sheets, and a borrower's proven ability to generate real wealth, given the inherently limited money supply. This means more thoughtful investment, less speculative bubbles, and a deeper connection between finance and tangible economic growth. Everyday life under a gold standard would feel refreshingly stable, yet demand prudence. Consumers would welcome price consistency, making budgeting and long-term financial planning much simpler. However, wage growth would likely be more gradual, tied directly to increases in the real supply of goods, services, or gold, rather than inflationary pressures. This fosters a renewed societal emphasis on the intrinsic value of hard work, diligent savings, and responsible spending. Financial mismanagement would have clearer, more immediate consequences, unmasked by inflation. Banking and transactions would also undergo a fundamental shift. Institutions would likely move towards asset-backed models, facilitating transactions inherently convertible to physical gold or certified gold claims, thus rebuilding fundamental trust in the monetary system. Reverting to a gold standard while offering stability would undoubtedly bring significant challenges and unintended consequences. Economic expansion could inherently grapple with the finite, slow-growing gold supply, making rapid industrial development and innovation harder to finance. Furthermore, recessions would become tougher to tackle without the central bank's ability to inject liquidity, risking more severe and prolonged economic contractions, potentially even deflationary spirals. Finally, there's the genuine peril of gold monopolization. A few powerful nations, institutions, or even cartels could amass overwhelming shares of the world's gold, thereby wielding immense undue control over global finance and economic destinies, shaping policies to their advantage. This rigid system could limit flexibility and foster new forms of inequality. Reverting to gold brings fiscal discipline, reshaped power, and stability, but risks constrained growth. In your opinion, what if gold returns as the global monetary standard? Share your thoughts in the comments.